Thanks for tuning into this episode of FinTech Focus TV, powered by Harrington Starr, the global leaders in financial technology recruitment. Head over to the Harrington Starr website where you'll be able to find all the latest jobs in financial technology across the globe. You'll also be able to download the latest issue of the Financial Technologist magazine, including the Top 1% Workplace Awards. Finally, if you're looking to grow your team, please get in touch. Enjoy the show. Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today, I'm absolutely delighted to introduce you to Dan Chaplin. Dan Chaplin's from Dawn Capital. Loads and loads of press about Dawn Capital recently. They've been doing some amazing things out in the marketplace. I'm sure some of you will have seen it and read about it. And so I've been really excited since this one's been booked in the diary. I've been looking forward to it for a long time. So Dan, it is lovely to have you on the show and lovely to meet you today.
No worries. It's a real pleasure to be here.
Well, thank you very much. So, look, we're going to go into the market and what's exciting in themes in fintech. We're going to be talking about the climate, I think, for investment, which is always a very hot topic, but none more so than probably 2023 in terms of where we're going. As we put this out, it'll be knocking on the door, if not already 2024. So it's going to be really interesting to see what you think the view is for there onwards as well. So loads and loads to get into. But before we do that, I always ask people to introduce themselves and tell us a little bit about yourself and about Dawn Capital.
Sure. So I'm one of the partners at Dawn. I spend 95% of my time investing into the European fintech ecosystem. Been an investor now with Dawn for going on 6 years, and I spent my previous career also in financial services at JP Morgan, helping companies in the European market to buy and sell one another in the financial markets, so banks, insurance companies, asset managers, and market infrastructure businesses. So, fintech's an area I've been super passionate about and been involved with my whole career. Dawn is an early stage VC fund. We're based in London, but investing right across Europe into companies with European roots and global ambitions. It's a specialist B2B software fund, but a good proportion of what we do is in the fintech space, whether that's specifically fintech businesses or actually our wider software companies where financial services is a big buying vertical. So yeah, I'm delighted to be here.
Well, fantastic. And as you say, I think it's really interesting. That space is something which I've always been, very much drawn to. I think there's a lot of innovation within the fintech sector, full stop, as you know. And I think there's some brilliant companies that have gone through that sort of thing. I think Series A and Series B is a really interesting time for businesses to be growing, and their access to funding is I think probably been really good over the last 5-10 years with businesses like yours who've come through and really sort of been able to take some considerable success stories all the way through. So I'm interested to sort of find out in a bit about how you define what good looks like in that sort of space, and where the I know how many people will be coming and knocking on the door and looking for it, how many people sort of fail at that sort of stage and the select through that get through. I'm really interested to find out the roots and the DNA of that. But before we get into that, I want to talk a little bit more about Dawn. And I mentioned before the news, there's a $700 million raise that's happened recently. The latest funds coming through, based on a bedrock of outstanding performance that you guys have had so far over the years as well. So talk to me a little bit about what that means, how it came about, and what it means for yourselves and for the businesses you're involved in and the ones you want to invest into.
Sure. I mean, so we've been investing into the market for now 15 years. The funds originally set up in 2007. So, we've been investing into the European ecosystem through, I guess, one cycle already, and in an ecosystem that I think has been growing in strength and continues to grow in strength. I think whatever you see in the press about it being a terrible time for companies to be raising, I think you have to kind of take a step back and see this in the context of the wider market growth that's taken place over the last decade. We've never seen a deeper bench of founders, of operators, of talent who are looking to jump ship from larger businesses into the startup ecosystem, because they see the problems that exist for corporates day in, day out, that can be solved by best-in-class technology companies. So the problems never go away. the founders, the best founders in the market are consistently looking for money. And I think the LPs who invest into us recognize that is an opportunity. And I think an opportunity in Europe today, as it was in the US, 20, 30 years ago, when all the Silicon Valley VCs were setting up. So I think the 700 million raise for us is a testament to that increasingly global view of Europe as a hotbed of opportunity, and increasingly a continued view of the opportunity for us to continue supporting that ecosystem.
I think there's a very interesting point that you quote that you came out with personally when I think you mentioned the raise, where you said it's a monumental time to be investing into B2B software at the moment. And when you talk about that shift and the sort of generational opportunity that came up sort of 20, 30 years ago in the States, as you say, I think the interest, and we were speaking about this beforehand, right? I'm a very optimistic person by nature. And one of the things that's frustrated me incredibly over recent years in particular has been the constant swell of negativity through the press. And I think with behind that, if you look behind the headlines, there's always a sharp beacons of opportunity that sit beside that. And I think there's always, as long as time has happened, been people who turn negatives into positives and drive things further forward from it. So I'm really keen to understand, when you wrote that and you said a monumental time to be investing in B2B software, and as you mentioned within Europe, what makes you feel it's that sort of monumental space? What's the rhetoric behind that gives you the confidence that this is such a good time in the marketplace, or a good time in the marketplace, should we say?
Yeah, look, I think it's really, again, you need to take a step back here and see that we've really only started to see a shift from the global economy moving from something that's very analog to very digital, and big platform shifts like the movement to cloud. We might think that we're actually at this, fairly progressed in that, but if you actually look at the adoption of cloud by the large banks, the large insurance companies, asset management businesses, it's still so early in that transformation journey for these businesses.
Agree.
And that means that realistically, there's huge opportunities for companies that are enabling that shift and moving things like payment systems, like account systems, onto digital rails. So, whether it's cloud, whether it's increasingly things like digital asset rails, new payments infrastructure, we see opportunities for young B2B software companies to help incumbents with digital transformation, which is so required when customer experiences are reliant on digital infrastructure. Yeah,
I think that's the key part, isn't it? And you're absolutely right with cloud within the financial space. I think it was very reluctant to adopt cloud, to trust cloud for obvious reasons with regards to regulation and just sheer risk factor that sort of came around that. And I think it's been spoken about before that sort of the fuel on the bonfire for cloud adoption was the pandemic, and it became very important for businesses. And you saw that huge spike in cloud-based software businesses and SaaS software businesses to sort of take off within finance finally to get through those sort of things. And the stranglehold had always been procurement before that, to be able to, for obvious reasons, again, to be able to adopt that into it. But you're right, I often sort of bemoan the sort of pace of innovation within financial services and how difficult it is sometimes to do that. But I think with an increased interoperability and a desire to sort of have best in breed, and I think our digital lives changing so dramatically in terms of our expectations of what we're doing. When you look at the desktop and when you look at your work, you want to have that instant gratification. There's so many companies that are doing clever things around that and allowing themselves to be doing that. And I guess it's businesses like yours that give them the credibility and the runway to be able to go through those processes to allow that adoption to come into play that can then transform the industry afterwards, right?
I think so. I think it's it's understandable that it's taken a long time for large institutions that are reliant on extremely robust, reliant on having technology and processes that are extremely robust and secure, that it's taken them a while to get comfortable with new technologies. I don't find that in any way surprising, but I think a huge amount of work has been done by some of the large cloud providers in the last few years to get banks and incumbent financial institutions comfortable with that shift. And it's now for us an opportunity to invest in the nuts and bolts businesses that actually enable them to take advantage of that new architecture to create much more efficient workflows, efficient processes, much more data-enabled processes, leverage advanced technologies like AI by having a robust data infrastructure and cloud-enabled data infrastructure in place. We're looking for the cogs that can actually run these machines and create better customer experiences for them, both revenue generating and cost reducing.
Yeah, I think that there's a sort of theme there, isn't there, about revenue generating, cost reduction, increasing productivity, reducing friction. These are all sort of buzzwords that you hear all the way through the process that people are looking for. And actually, I think it's about solving those real problems in the industry, those real bottlenecks in the industry. And there's some companies there doing some amazing things. I was looking at your portfolio earlier, and I can just see that the sort of logic that goes into those businesses where it's solving genuine problems, as opposed to just like, we've got some great tech here and we want to go into it because it's cool tech that doesn't necessarily shift the needle as much as it should do in terms of where we're going. And I think that's a very common theme with what looked like to be what ran all the way through the businesses that I know that you've
I think a good example of that, I think Roy Sarden at Access FinTech has been on your show before, and
a regular. I think he's the most seen person on the show over the years as well. Always a great guest.
Right, and it's a great example. I mean, that business is effectively taking siloed data information systems that exist across the buy side and the sell side of the industry, and then shifting them into a shared cloud environment so that settlements and many other use cases can be much more efficient, because there's suddenly transparency where there was previously opacity on actually what trades looked like on either side of the table. And that is just something that couldn't have happened 10 years ago. But you're seeing a huge shift in the willingness of that financial ecosystem to move onto platforms like Access FinTech and move away from what would have been therefore previously analog processes of sending people emails or phone calls literally to understand what their view of the same trade was on the other side of the table, to suddenly having that all in a very transparent platform environment. So yes, absolutely, it's realizing huge cost efficiencies for these kinds of institutions.
And that's an incredibly exciting position to go into. So when you're looking at those businesses, and when we look at the common themes between the investable businesses for you, the ones which are going to a portfolio that I think, what we're probably looking at there is the sort of very peak of the mountain in terms of the people who must sort of be sat there looking for that investment and coming to you and knocking on the door. I've spoken to various different people over the years about how many people they actually say no to get to the yeses alongside that. So to do that, you've got to make it easy for companies like yours to get it and to be excited about it, and to want to make sure that they back that up with the investment around it as well. So if there's people there who are thinking about Series A and Series B at the moment and going through in a competitive, probably a really competitive landscape at the moment, talk to me about what they can do to stand out. What are you looking for, and what are some of the important things that you look at when you've got people coming through the door to you at the moment?
Yeah, sure. So we probably look at about 2,000 companies. We see about 2,000 in the companies in the market at any time that are potentially investable. And in practice, we invest in 8 to 10 companies a year. So
yeah, it's incredible.
Really, for us, it's not a question of why would we say no. It's really a question of why are we saying yes to this specific company. And I think we do two things. I think the first thing is we're a specialist fund, right? So we only do B2B, which allows us to kind of narrow that universe already to begin with. And then I think secondly, we have specialists within the team. So some of my colleagues will spend most of their time looking at data and infrastructure businesses. Others will spend a lot of their time in the security ecosystem. And then on my side, I spend most of my time thinking about financial services infrastructure businesses, whilst my colleague spends more time thinking about how you enable corporates and SMEs to access better financial services products. So we spend a lot of time, therefore, thesis building around what the biggest opportunities are going to be over the next few months in these specific domains. And then we look for companies that fit into those theses. So for us, as an example, we've thought that open banking as a market was one that would be incredibly interesting in the European market. Would have the depth of TAM, like the addressable market, to create billion size plus outcomes, and would eventually require defensible technology stacks as well that would create sustained value over time and not just flash in the pan revenue generation. So we built a big thesis around that for the right stages of the markets. And a few years ago, we invested into a business called Tink, which was a Swedish-based company, a very early mover, almost you could say a pioneer actually in the open banking ecosystem. And they were thinking about how you would actually create usable technology infrastructure to support open banking, the conceptual benefits that companies could realize out of open banking. And the biggest challenge in that market was actually connectivity, because whilst regulation was creating the required openness, in practice, the actual technology to connect banks to one another wasn't there. You needed an infrastructure provider to provide that connectivity, and Tink was that player. So they created value for a range of large European banks and payments processors, just providing robust connective tissue based on an set of open banking regulations to provide people with account data and payments, payment initiation services.
And your thesis, sorry to cut in there, was to go out there and say, right, that's the sector which we know there's that sort of need for that particular connectivity within the space. Let's look at who's out there. Let's look at who the right businesses to invest in will be. And then you went and delivered thereafter and approached them as opposed to them approaching you. How did that work out? Was that the right
Exactly.
Yeah.
We did a full market scan. So I think at the time when we invested in Tink, there were probably 20 or so businesses, all with started with some kind of technology stack in that space that could have been potentially investable for us. So it was a question of, how do we pick the right team and the right technology to go after in this space? So
and those are the two T's that you look at, right? Team and technology. Is that a fair part of the equation?
It's team, technology, and then there's got to be I think there's something else around momentum as well. There's the timing. That's probably the third T. So you need to have hit the market at the right time with a sufficient momentum to be building enough credibility and thought leadership in the space. So, and that obviously helps you to build team, because it helps you attract the right quality and quantity of talent into the organization at the right stage of the business. And obviously it helps to generate capital interest, like from investors around the table as well. So, Tink had team, the quality team in spades. Daniel and Frederick were a fantastic founding pair who, as I said, were really kind of pioneers in this market, because they had been thinking about the problem far in advance of the regulation actually being put into place, and had built a consumer business that had been focused on creating some kind of open banking enabled experience for their customers, again, before the regulation was actually in place to allow that. So they'd really kind of thought about the problem for a long time before. And then in terms of the technology, it was an obviously much more developed stack than some of the other players in the space at the time. And the momentum, the business was just significantly scaled. And in a market where you're trying to build connective tissue between banks, and that requires a huge number of developers, it was an obvious place to play. Interestingly, we've just done a deal in a business called Bright, which is our second go round of that market. Tink exited to Visa last year for $2 billion, and we still think we're in the early innings of this space. And that market,
incredible, that, isn't it? That you can go in there and have that sort of journey, and then still say that you're sat there in the early knockings of it all.
I think so. I mean, look, at the end of the day, the market itself has also evolved. So it's evolved, the infrastructure has got more robust, but the use cases, I think, are still in the early stages of their adoption. But it's become much more clear what the most valuable use cases in that market are going to be. It's going to be, I think it's really going to be payments and that people are going to see the most amount of value for the open banking regulations and open banking technologies. So Bright's our second kind of investment in that market. It's a pure.
Talk to us about Bright. What made it the no-brainer for you to invest after that, particularly after that success, and you're there and you've got knowledge and a track record in the industry. I imagine that means that everyone in open payments wants to be attached to that to that boat as well. Tell me a little bit about what made Bright stand out for you.
Sure. So I think it's three things. So firstly, I think it's focus. So they are absolutely focused on payments as a use case, which means that they've built their technology stack with a very focused ambition in mind, where the original open banking ecosystem players were in a much more immature market and therefore had to build a wider and broader set of technologies, giving themselves optionality for where use cases might eventually fall. So the third one is focus, and that focus has also allowed them to build a much more end-to-end payment solution than some of the other open banking providers provide. So they're not just pure connectivity infrastructure player. They actually offer accounts and collections. They're a regulated institution. They provide a full end-to-end payment solution for their customers, rather than simply a connective infrastructure for them to build on top of. So I think that's the first thing. I think the second thing is it's a fast follower, right? So they don't have the challenges of a larger OpEx base than some of the other players in the market. In fact, it's actually a profitable business today, that has been built on the back of I don't want to say it's not bootstrap, but it's been built in a relatively capital constrained way, such that they've really had to find not just product market fit, but actually a business model fit where they can create efficiency and profitability earlier in the journey, which we can talk a little bit about the increasing importance of that in this market. And then
it ties in with Access FinTech as well, going back to what you were speaking about with Roy as well. That's their journey too.
And then I think the third thing is that Lena, the CEO, is just very, very deep in this space. She was one of the executive team of Klarna. She managed Support, which was a generation 1 open banking player that was acquired by Klarna a few years ago. And then she actually was a CEO of another payments business called Clearo in the Nordics. So she just has deep experience of this payments ecosystem. So the three together made us feel extremely comfortable that this has got a great opportunity to be the next generation category leader for the payments open banking market and instant payments more generally, because open banking is just one technology infrastructure for Europe, but real-time payments that Bright is really enabling for customers and merchants, that's a global problem. That's a global opportunity.
Must be a wonderful thing for you to be involved in. I'm going to just think about the sort of businesses that you must be able to look at, the sort of lessons you'll be able to take from them, the interest in the people who you're meeting at all that sort of stages. I can tell you're passionate about it from the way you articulate those sort of stories. But tell me a little bit about the role for you. That must be a sort of great fun job to be doing right now.
Yeah, look, I think it's incredibly intellectually interesting, right? Like being able to take a view of what the world is going to look like in 5 years' time, building those kind of theses, and then actually being able to put your money where your mouth is, and then being proved right or wrong, and having an influence on the journey, right? Being able to support these founders and teams through the life cycle of their company's development. It's an incredibly rewarding job. And when you see outcomes like Tink happen for just ultimately fantastic people, it's incredibly gratifying to see the success of other teams.
I see people getting more and less involved at various different stages, and I always think that sort of relationship between founder and investor is a very important thing to get right there. You as you mentioned, that you've got a real joy for seeing the success of the people who you've helped on that sort of process. And I see companies who are there and they put money into it and say, right, get on with it, and then they sort of run by metrics there afterwards, and there's people there who are then more involved. How do you guys set up to work with the companies who you're investing into?
Sure, I think it differs for different companies, but by and large, we want to take an active, hands-on role. So that may or may not involve taking a director seat at the board. We may just be an observer, but I think for the vast majority of our companies, we have a director seat. In practice, I think it's three things: strategic advice. So we give people a zoomed out perspective on what success looks like at scale. So it's giving people, like, founders can often be like very, very deep in the weeds of the nuts and bolts of their business, that they're trying to get off the ground and trying to scale, and they can only really think kind of 3 to 6 months ahead because there are so many challenges involved with setting up and managing a young organization. But the investor's perspective to say, this is the direction that you guys need to head. These are the things that people are going to care about in 2 to 3 years' time, and therefore that needs to instruct what you're doing in the next 3 to 6 months. I think that's a helpful perspective to offer, and it's a perspective that we can see from, across a wide portfolio of, and again, especially because we're a specialist, we see similar kinds of journeys in the B2B market space, the similar kinds of sales processes, selling into similar kinds of companies and end markets. So you need enough depth of domain understanding to be relevant, but ultimately having a portfolio view versus a single company view is just a different and useful perspective for our founders. So I think that was the first thing. The second thing I think is we genuinely provide operational hands-on support to our companies. We have a talent acquisition team internally that supports our founders with executive hires, and then and setting up scalable people functions, actually, because we want to teach people how to fish and not just do the fishing for them. Then we actually have a range of operational ex-operators who work with us, who will do part-time roles for our companies. Either actually, some of them have even joined the boards of our businesses. Others are more hands-off, kind of ad hoc advisory services, but they help companies level up faster. So if you've never hired a CRO before and you want to know actually what does a good CRO look like, or you've never set up channel partnerships before and you want to know what does a good relationship with Accenture look like, or what does a relationship with Deloitte look like, and just judging actually with a tone of where you sit in relevance for those kind of partners. That's the kind of operator experience we can bring to the table, just to give people a broader perspective than they have sitting within their own individual company. And then I think the third thing is, obviously, we have capital, but it's actually our network of other people who have capital in the ecosystem when people are looking for follow-on funding. And I think it's a market that's relatively small. Everyone talks, and I think having a set of credible partners who you work with regularly, who can then come into your companies afterwards and provide follow-on capital, and actually the next stage of capital is very helpful for our founders.
So it's helping those businesses go from that, because I think that's an important part, isn't it? The journey from B to C to D, et cetera, and onwards from there is a really important and underestimated fact. Because I speak to so many people, I'm really interested in what you were saying there about the sort of support given to it, because I can see it. I can see running a business myself. You can see how sucked in you get to the next 3 to 6 months, and and how difficult it is to forge the time to look ahead from it. And I think having that sort of support is invaluable when you're running a business alongside that. But I also know, and I've spoken to so many founders who've gone through Series A and Series B, and the time after they've just raised that capital is generally a period of absolute exhaustion. Right? So they sort of sit there and they've been through it, and they're so invested, obviously, because usually founders who've come through a process, they've gone through that. There's a lot of reliance on them to get to the next sort of phase and move through all of that sort of thing. There's a lot of paperwork and legalities and everything to get it right and on point, and negotiation and everything else between that. So if you were to give advice to people who are going into Series A and Series B negotiations and to set themselves up for it, I think a lot of that is about making sure they set themselves up to succeed for it, because I think it's always it amazes me how much of a surprise it is to people when they get to that sort of phase, about how, in honesty, for want of a better expression, difficult it can be during those sort of processes, and how they've got to sort of remove themselves from the business to almost focus on this and have the business run itself at that sort of stage, which is also very difficult to let your baby go at various different times as well. What would be your advice in that sort of scenario?
It sounds very generic, but honestly, be prepared ahead going out to market is the number one piece of advice. We often see people get into a process and they're talking to a few people, and then they talk to a few more people, and the information requests drip in and they've not quite got them prepared, and then they have to prepare something new, and the process gets extended, and actually the business changes quite a lot during the process, like the period in which you are investing, the period in which you are raising. And that's just a really difficult way to run a process. I think you've got to hit the windows, frankly, during the year in which investors are looking for new opportunities and most likely to be looking for new opportunities, and you need to hit them hard at a pace and with all the materials in the right place. So, taking the Christmas period, taking the summer periods that are frankly quieter to kind of get your data room in place, get your financial model there, get a pipeline that you can fully explain, that's robust and that covers your next year's numbers and expectations, giving people a solid view of what the actual equity story for the business is, like not necessarily where the financials are going to be in 5 years' time, but certainly what the business might look like in 5 years' time, and your wider vision for what it could be, like the wider platform vision. I think these are things that you need to articulate very clearly and have a very tight story around. And if you've got all of those things in place before you go out and you actually start to tap the market up, you're in such a better position to then run a shorter and tighter process. If you obviously already have existing investors, getting warm introductions from them into follow-on investors is obviously the best way to go about it.
Yeah, absolutely.
The number of cold outbound emails that I receive from founders every day is far too much to handle. We can't look at every business, so we have to find some way to filter, and going off referenceability is often one way to do that.
It might be that there's an absolute nugget that's sat in the email box there, but I agree that's sort of ability. There's only so many things which you can do, and that network and recommendation, I think, is always a critical part of it.
Again, it comes back to that we can focus on 2,000 opportunities, but we're realistically going to do 10 deals a year. So we have to have a target list of what we think roughly those 10 deals are going to be, or what spaces they're going to be in. So it's a lot more focused than people coming like even investors, other investors we respect, saying there's a business that we have that is raising right now. We may not look at the business because it actually just doesn't fit into our kind of like hot zones that we want to be looking at for that next 24 months.
It's discipline, isn't it? It must be very difficult to say no to companies there that you can do it, but I think that discipline to sort of say, right, here's the 8 to 10 that really fit our profile, and the discipline to say no to people sometimes I think is incredibly difficult. The difficult to say no to opportunity. Difficulty to say no to opportunity, I think, is an incredibly powerful thing, and I think the best businesses are as good as they are at saying yes, are also very, very good at saying no at the same time as well. And I think that's always been a difficult part for some people to get right within that, because they want to try and be everything to everyone within it at the same time. I'm conscious that I could be talking about this forever, because I could be tapping your brain for a long time, because this is something I'm really really interested and passionate about at the same sort of time. But I want to move along a little bit into that crystal ball that you spoke about. So when you said there, the intellectual stimulation of being able to look ahead and look sort of 2 years, 5 years and onwards, past what's going to be happening today. Tell me a little bit about what that looks like. If you've got your crystal ball out now and you're looking for the run up to 2030, as crazy as that sort of sounds to us today, what have we got in store over the coming years, and where do you think the sort of hot zones are, and where should people where should people be turning their attention to?
So I think there are 2 areas that on the fintech side that we're spending a lot of time thinking about. One is actually B2B payments. So there's been a huge amount of investment, and there's been a huge amount of improvement in the consumer payments experience and the way that payments get collected over the last few years. But on the business payment side, like 95% of that market remains offline, and the market is 3 times the size of the consumer payments market. And it's offline often for relatively good reasons, in that business transactions typically tend to happen a little bit more. They're not taking place so often in an e-commerce setting. They're not taking place with such regularity. They often involve larger sums of payments. But there are also intermediated by other software systems like procurement systems or like ERP systems, and I think increasingly we're seeing a movement of these kinds of transactions onto marketplaces because it's a more efficient and cheaper way for businesses actually to procure and get the best deals in the market for particularly for less strategic items. So, there will be, there already is a necessity to improve the payments infrastructure for these businesses and move from analog processes, often simple like pen and paper processes and bank transfers, through to a much more seamless and frankly also financed payments ecosystem. So we're spending a lot of time in that market. We already have a business called Billy, based in Germany, that's doing B2B buy now pay later. So enabling businesses to actually get financing on e-com sites and marketplaces at point of sale, which is obviously very standard for them to pay on terms in an offline setting, but just hasn't been possible for them to do in an online setting. So they're enabling them to do that. So that's one area. I think another area where we're spending a lot of time is mid-market financial software. So we've seen a huge amount of investment over the last few years into the SME market, helping smaller businesses to improve payments, their payment systems, their accounting systems. Companies like Xero have done a tremendous job in the Anglo-Saxon world for the lives of small businesses. But actually, many companies graduate or need to graduate off Xero, and they find that there's actually a relatively limited choice for cloud-enabled solutions in that space, and it's a really deep space. So we're spending a lot of time in that market. It's a complex build. Frankly, it takes a lot. You need to build a pretty broad product to support these mid-market firms and replace what they already have in place from an ERP or accounting to ERP-like solution. But we think there are wedge opportunities to take off pieces of that puzzle, at least in the market, and expand with the customers over time. So that's the second thing. And I think the third thing that we're spending a lot of time thinking about is know your business, so KYB solutions. Similarly, because know your customer, so onboarding for consumers has been, I think there are many businesses that have done a great job in that market. We think know your business, which is actually a more complex problem to solve, because businesses are frankly more complex to onboard, and there's a lot more data around them, and there's also directors that sit on top of them that are consistently changing. So it's just a more complex challenge to solve in multiple different markets. So we're spending time looking at that space as well.
It's fascinating, isn't it? And when you look at it there, and everything is sort of locked into how you can see things develop and evolve within it. I love the idea of being able to sort of pinpoint these and spend time thinking about it, and then sort of evolving into it. As I said before, I think what you're doing is a fascinating role, and must come up with some incredible stories behind it. And actually, I think as well, that sort of euphoria of seeing those businesses that you've backed and bet and effectively gone into, come through and have some of the results that you've seen recently. I've seen some pretty stunning stories from Dawn and what you guys have achieved over the years. What do you think that is? What sort of allows you guys to get it right as often as you do?
I think being disciplined. I think that's and being a specialist. I think spending time in markets that you really know and understand, and where you're really when you're thesis driven. I think it's venture's a game of winners, right? So you want to be, when you're right, you want to be really, really right. So you want to focus on markets and opportunities that are deep enough, and then you want to be able to go long on the opportunities that are on the companies, with the companies that are going well. So it's backing your winners in the right markets, but picking the right markets is a question of focus.
Yeah, I absolutely agree with that. Dan, I'm just seeing the time, and I've done a terrible job at keeping my discipline. Speaking of that, to keeping it into the half hour that we usually run with, but that's testament to the fact that I could be talking about this for several days still with you, I think, and not get to half things I want to do. So I'd love to have you back on the show at various different times in the future. I've really enjoyed having you on here today. So people who are watching this at the moment, tell me who should be reaching out to you, and what's the best way for them to get in touch with you?
Sure. I mean, look, we're all on LinkedIn. We do read our messages. We have email addresses, but we also work with a range of kind of existing investors as well. So a warm intro is often better, but we do read our emails.
I know we've spoken before about those 2,000 that come through. So hopefully it would have to stand out, or make sure you put an email through to you that stands out, right?
Yeah, exactly. But I mean, look, we're backing companies at Series A to C. So we write check sizes of between 5 to 50 million. So companies that have reached product market fit, thinking about the challenges of scaling people and processes and operations, and that's where we can come in and provide a lot of support. So we want to back those companies at the inflection point of their growth journey.
Fantastic. Well, listen, Dan, I really appreciate your time today, and congratulations with the raise. Congratulations with everything that continues to go full steam with the business, and I wish you the very best of luck with everything in the future. I really appreciate you coming on the show today and joining us.
Great. Thank you very much for having me.
An absolute pleasure. And thank you all for watching. We will see you soon on another episode of FinTech Focus TV. Thanks a lot.